Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody. Let's update our view on short-term gold analysis. So yesterday in our weekly Forex report, we dedicate a lot of time to discussion of the new sentiment that now is forming on the markets, not only on the gold or also on the Forex and in general. This sentiment stands in relation to expectation on the Fed policy. Currently, more and more factors stands in favor of the postponing of the tightening steps from the Fed, higher steps from the Fed. First is the weaker than expected CPI report. Next one was on Friday, which actually has become the major reason of this rally that you see on the gold market. This was the weakness in the Michigan sentiment forecasts for the nearest perspective. And that makes investors to think that maybe Fed is right. It's maybe the spike in inflation is a temporal, and within a few months it will return back and show some decreasing, and situation with inflation stands not as crucial as was shown in the media. But this theory needs some important tests. Need to pass some tests. And the first test that we will get will be the non-farm payrolls in September. This will be a really vital point, and a lot of bets will be rounded. If payrolls will be weaker and inflation in the wages will be softer, it means that Fed is right, and there will be no questions on the postponing on the expectations. Even now, the opinion of the big banks suggests that we will get no announcement of the tightening in the Wyoming meeting by the end of August. We will get no announcement of the tapering in a September meeting, and everything is postponed to the November at the best. With the weaker non-farm payrolls release, we will see nothing and hear nothing until December. So as you understand, this really free a lot of space for the bullish performance on the gold market, and not only on the gold, but on the Forex market as well. That is what currently is going on the sentiment. Although we do not see big changes in the long-term technical picture yet, so trend remains bearish as on the weekly chart, as on the monthly chart, but that is what is going on currently in the mind of the analysis of the big banks, according at least by the Reuters polls. So what we could do in the current circumstances? First of all, we have very strong bullish momentum on Friday. And actually, if you'll take a look at the weekly chart, you will see that it takes the shape of the huge bullish hammer candlestick pattern. So this is really a strong reason to at least not to take position against this pattern. So that's why currently we do not intend to take the big short position on the market against this recent rally, at least on the daily chart. And in the nearest time, we see that gold should pass through the few tests. And the first test will happen right in the beginning of the next week. So you can see market is challenging the conference resistance that stands on the daily chart, but at the same time, it's coming very close to the daily reversal area. It's around 18 even level, and starts flirting right in the beginning of the week with the MACD predictor line. All this stuff stands, take a look right at the resistance of this consolidation. So we don't have the fib level right here, but this is natural area that you could see even right to the left. So it's resistance again, support. Now it will be resistance. Here was also resistance. In general, 18 even area is a psychological factor that all investors are talking about. Short-term potential by the opinion of the investors in the market, so we put it in the weekly report as well, stands in anticipation of the possible upward potential around 1850. So that's short-term levels that now in the mind of the investors. But first is the test around this area. That's what we intend to keep an eye on in the beginning of the week. Second test, by our opinion, will be right at the upper border of the weekly triangle that we're discussing. So because even if market will climb to the 1850, 1860 area, that could become the part of the big bearish pattern that we suggest or might be formed here. And that will be second serious test, but well, probably it stands out of the scope of the current week. So it's just longer term perspective. Why are these levels very interesting? What the other reason stands why we are watching for this? Because if we take a look at the hourly chart, recall the pattern that we discussed previously, and we said that take a look at first resistance and first level we intend to consider taking the short position on the intraday chart. It might be 1785 because it stands very close to the confluence right here, but also because this is the OP of this ABCD pattern. And in fact, that OP, despite that OP stands slightly higher than the confluence level, by the Jordan-Napoli framework, it still creates an agreement, and breaking of the confluence just to touching of the OP should not be treated as the breakout of the confluence. It's that the feature of the target, the feature of the objective point, that market is gravitating to complete it. Once it is completed, it could easily drop below the confluence. So here's, by the way, the minor OP stands as well, this minor pattern. That's why, as you can see, lots of different points and indicators, target stands in the same area. OP, daily, MACD predictor right here, daily overbought stands right here. And for instance, once we will get OP right here, and later in the session we will get the grabber after testing of this, for instance, overbought area. With this practice triple to sell on the background, that will be a very good background for taking scalp short position with the target at least around 1745. This confluence support probably will become the minimum target of this pattern. And later we will see what will happen. That will be the second question, how market responds to the support areas. So to confirm the bullish ambitions, market should not drop too far. Any major levels, preferably it will be confluence, but if market will return to the 1720 and start upper direction again, that will be enough, bullish enough to consider higher standing targets on the follow time frame chart, for example. But first, in the beginning of the week, let's focus on this bearish context and see what reaction market will show on this combination of different patterns and levels.